Hi, welcome again to another edition of Market Analysis for today, April 24th of 2025. I'm Gio Betancourt, and this is a recording done by Vantage Markets right about 45 minutes prior to the USA Open. Well, if market moves are making you dizzy, you're not alone. Early Thursday, the word out of China was that no negotiations on tariffs are actually taking place. That's a retort to President Donald Trump's remark that the levies will come down substantially. And insight had generated 2 days of stock gains. The Wall Street Journal put some numbers on Trump's thinking, reporting that the levies could drop to as low as 50% from the current 145%. Of course, that will still be a lot higher than they were before the president started his trade war. And no final decision has been made. If Trump wants a negotiating win as well, the two sides will also need to actually begin talking for levies to end up being lowered. Anyone reading the news must be thinking, here we go again. The swings aren't normal. This April's intraday volatility, the average difference between highs and lows in a single trading session, it's said to be the highest since March of 2020, the start of the COVID-19 pandemic. It's the fourth highest since 1979, behind only 2 months in 2008, during the financial crisis, and October 1987, when Black Monday caused havoc, according to the Dow Jones market data. Now, more volatility can mean prices going up as well as down, but history suggests it's usually bad. Markets take the stairs up and the elevator down, the old saying goes. The word that almost always accompanies volatility is uncertainty. The Federal Reserve's beige book shows companies are worried, talk of recession is back, airlines are dropping guidance altogether. It's important to remember the end of the turbulence will eventually come and calm will resume. Put emotions to one side, try to stay strategic, and think long term is the best way to avoid market motion sickness. And with that being said, well, we see that volatility, that uncertainty. Even though the market yesterday did open gap up, it wasn't able, and it continued to move the direction higher as of the gap. It did fluctuate to our second level of resistance. They were violated, but they weren't breaking, meaning that we didn't close above them. So I'm going to leave those same levels for today. Today we are basically in a doji. We're flat. We have had a bit of a volatility in the market, but not much. I mean, let's see what will happen as the obviously the earnings season continues. But 50-50 that this will continue to we'll make another attempt. Obviously, fluctuate above 19,000 and see if we could actually break these two levels of resistances. Now, otherwise, should we see some more uncertainty and more bad news coming out of companies not meeting the expectations, like PepsiCo, for example, that didn't beat expectations? Will we see that drop? We'll find out. But I'm speculating that due to the effect of the momentum that has been picked up anyhow, that we could probably make another attempt at a leg higher. So perhaps looking to buy. Then the S&P, also S&P hit our 5,500 resistance level, but it quickly retreated from there. So we are also just basically flattish as well in that scenario. Another attempt at 5,500 could be seen. So far right now, if we were to open right now, we would be opening down in this red candle. It did if you look at it, the 20-day moving average, the medium in the Bollinger Bands did its job as what is used for in these cases, a dynamic support in this case, and the market did rebound from there. But it is looking to come down again. Then the Dow Jones Industrial, also flattish. I mean, it opened at 39.78 and it closed at 39.775. So actually just one pip, 786, so 13 points below the open. It is rebounding off our level of support so far. So I'm gonna leave the same levels. And let's see if the Dow will make another attempt lower in this case. So crude oil. Now, crude oil has a particular case. So yesterday, the market did fluctuate above and below. Look at this such wild swings for crude oil. It did obviously tanked. All right, so let's see what will be the case for today. I'm gonna use the yesterday's open as our first level of resistance and $65 as our second one. All right, support I'm gonna leave the same using that swing low from yesterday and that psychological round value of 61. So far it's looking that it's looking to regain that ground lost yesterday. So far going with the trend, intraday trend, which is up higher, so buying. Nat Gas. Okay, so Nat Gas is not doing what we were thinking about yesterday doing, that it had found its bottom here and then it was going to rebound and move higher. It's looking lower, so therefore I'm going to leave 290 as our probable level of first level of support, and 285 our second one, so targets. 290 selling Nat Gas. Gold. All right, so gold yesterday had a pretty wild swing. It opened down, the gap down, it was closed, and the market fluctuation continued to go lower. It is retracing right now, actually recovering right now. So I am looking also to continue to be bullish on gold, looking to buy gold. So let's see. We need to obviously close above 3,500 and just continue to climb above 3,500. But that's in time it'll do it. Like by when I don't know. So I'm gonna use psychological round values at 34, sorry, and then I'm gonna use half a cent movement to the upside. $33 support, and then the moving averages that are intertwining, well, they're about to intertwine, cross each other over. So let's use that. Nice move to the upside after this, the breakout. So this is profit taken. All right. Could we come? Have we found that bottom, or have we already began that retracement? It looks like it could be, but well, let's see. Anyhow, long-term buying silver. All right, so copper, again, within yesterday's trading session, all right, this is creating that setup for a breakout. So I am favoring a breakout to the upside. $5 is the target. Bitcoin. So Bitcoin, after almost hitting 95, it hit 94,724, it's looking to retrace itself. So let's see if $92, the psychological value, will that help it enough to just find those support, find those buyers, and then continue this rally to the upside. RSI is not even, it's getting close to being overbought, but it's not in there yet. So there's still room for that to happen. Then the currencies, the euro is looking, so far it's creating a double bottom. So let's see if it'll rebound from here and fluctuate higher towards the 115 candle. And then the pound also creating that double bottom also right now. So let's see, that 134 will be met today, and the dollar index has opened gap down, and I'm going to speculate, better I'd rather say, that we will see a lower leg today and the dollar index towards the 98.5. I'm going to bring this up a bit. That has support right there for the dollar index. And if that happens, obviously we'll see a nice pickup on the currencies and the metals. That's it for me today. Have a great trading day, and I'll see you tomorrow.